Good morning, Thurston Caicos. The last time I spoke to you, I spoke about savings and how opening a savings account could help you to overcome some of your financial problems or help you to meet future obligations. Today I want to talk to you about another type of account that your bank can provide for you. That is a checking account. Now, while a savings account allows you to accumulate money for a specific item, such as a vacation or a college education, a checking account gives you ready access to your money to pay for everyday items and expenses. It is also known as a current account. A checking account is one of the most basic tools for managing your money. When you open a checking account...
Okay.
Ready?
Yeah, 3, 2, 1.
Good morning, Thurston Caicos. The last time I spoke to you, I spoke about savings and how opening a savings account could help you overcome some of your financial problems or help you to meet future obligations. Today I want to talk to you about another type of account that your bank can provide for you. That is a checking account. Now, while a savings account allows you to accumulate money for a specific item, such as a vacation or a college education, a checking account gives you ready access to your money to pay for everyday items and expenses. It is also known as a current account. A checking account is one of the most basic tools for managing your money. When you open a checking account, the bank will give you an account number and a book of checks. This checking account allows you to keep your money safe rather than carrying around large quantities of cash. Periodically, you will receive a statement telling you your available balance and outlining all the transactions on your account. The statement is a record of all the withdrawals or debits, that is, money taken out of your account or subtracted from your balance is an easy way to think of it, and the deposits or credits, this is money you have put into the account. Therefore, it is added to your balance. Here is tip number 1 that I want to give you this morning. Keep a separate savings and checking account. Keeping the money you want to save separate from the money you want to use for your daily and monthly expenses can help you reach your savings goal quickly, as it means that you do not inadvertently use money you are keeping for a big purchase or a rainy day. Tip number 2. Use cards and checks instead of cash. By paying for items with checks and card, you will not need to carry around as much cash. This means your money is safer in case you lose your wallet, your home gets broken into, or in the unlikely event you are mugged. Checking accounts have improved their ease of use over the years, and almost every bank will offer either a cash card or a debit card to go along with the checking account. These cards will be programmed with personal identification numbers, or PIN numbers for short, which you must keep safe in order to avoid others from accessing your account and withdrawing your money. There are 3 types of cards usually issued by banks. The most basic is a cash card, which allows you to withdraw money from the ATM, and in some cases only that particular bank's ATM. Some cash cards do allow you to access your money from a network of ATMs, but cash cards cannot normally be used to purchase at a point of sale, such as a shop, restaurant, or supermarket. The next type of card is your debit card, which allows you to access your account at the ATM and use your cards at point of sales that accept them. And finally, there are credit cards, which essentially is the bank lending you money at a generally high interest rate for a short period of time. You must be pre-vetted by the bank, and they will set a limit on your card. You can withdraw money and make purchases with these cards. Tip number 3, do not go overdrawn. The easiest way not to go overdrawn is to sign up for accounts that do not allow you to spend more than you have. Overdrawing, which means taking more money from your account than you have available, can result in an overdraft penalty or fee. If your account cannot be overdrawn, using your card to pay for items is the easiest way of ensuring that you never spend more than you have. The card will automatically be rejected if you have insufficient funds, and you will not be charged a cent in penalties for trying to use it. It is usually best to pay by card if you can. However, if you pay by check, make sure you keep track of your available balance. If you write a check without enough to cover it, the check will bounce, and you will be charged a fee. Increasingly, the store that you gave the bounce check to may also charge you a return check fee. Writing a check for which you have insufficient funds is very expensive. Banks will usually stop you from spending more money than you have in your bank account, but that is problematic when you write checks. If you write a check manually, your bank won't know about it until the person or business who receives the check takes it to their own bank to deposit or turn it into cash. So it's very important to keep track of the checks you write so you always know how much money you have. If you mess up and try to spend money that you don't have, As I say, your bank may return or bounce your check and charge you fees, and this will adversely impact upon your credit rating. Examples of these fees are unauthorized overdraft fees, penalty interest fees, or return check fees. These fees are completely within your control to avoid, so I urge you to do so by keeping track of your money. When you receive a checkbook, you usually receive a register, pages with grids. Within these grids, you should write down every transaction in your checking account. Each line includes a space for the date, a description of the transaction, and the amount. Your first line should be your opening deposit, the money you gave to the bank to open your account. At the end of the month, when you receive a statement from your bank, you can compare the bank's records with your own, identifying which checks are still outstanding that is not listed on your bank statement. Keeping track of your checking account with this register was easier before debit cards and ATMs. Remember that you need to record any transaction you did with your debit card in your check register if you are going to keep an accurate record of your available balance. Tip number 5, have your pay arrive at your bank automatically. If you have a job, find out about having your paycheck sent directly to your bank. This saves you the trip to the bank every week or every payday and allows you to receive the money in your bank account sooner. It also keeps your hands off the money so you don't have the easy opportunity to get in your own way as you try to save. Have a good day.